This is Matt Duffield from mattduffieldtrading.com, and tonight we're going to do a hot stock recap and analysis on FORD and DNRG. Those were the two penny stock winners I was looking at today. So before we get started, I got to remind you the information in this video is for educational purposes only, and it should not be construed as trading advice. I'm not a registered investment advisor. MattDuffieldTrading.com is not a registered investment advisor. And penny stock trading can be risky. You can lose a lot of money. You got to make your own decisions. So let's start off looking at FORD, the 5-minute chart. As you can see yesterday, this thing was just junk, trading in the 60-cent range. And they announced earnings this morning. And the earnings caused this super spike all the way up to nearly $4 per share. This thing was up, I don't even know, what is that, greater than 400% at that point? So the deal is the company reported 6 cents per share in earnings, and I want to say they reported a cash balance of around $4 million. And with the outstanding share base being so small, that comes out to about 50 cents per share in cash, which is pretty awesome for a stock that was trading at 60 cents per share. So considering the small share base, the low float, that's what caused this, crazy super spike. And even though it made this big move, the volume was still kind of on the low end. I mean, it's tradable, but it's definitely on the low end. So after it hit nearly 4, it sold off just as strongly, and then based here in the $1.20 range. And Tim Sykes, I know he bought in around $1.33, I think it was. And, the stock went on to close the day at $1.69. And during this period, you can see volume really picked up as traders jumped on board. So I'll show you what I'm looking at on the 1-minute chart. Last 4 hours of trading. There's an inverse head and shoulders pattern. So you got the left shoulder, the head, the right shoulder, and the price target of this thing measures to $2. And in after hours trading, this was already up to $1.80. Who knows, by pre-market tomorrow, maybe at the opening bell, this could already be at $2 because gains tend to, anytime there's an opportunity for a gain, it gets taken up quickly. So knowing that, I looked at the weekly chart from 2 years ago, and you can see that's where the resistance is, right here in the $1.70 range, all the way up to $2. So for me, what I'll be watching is if this opens around $2 or hits $2, can it break $2? Because above that level, that's when you have, super spikes, like what happened today when it went up to $4 per share. So I'll be watching for a break above $2 on strong volume, to see if this can continue, with these basically super spikes. So that's what I'm watching with FORD. I want to go to DNRG. That was our big winner yesterday. So let's look at a 5-minute chart over the past 3 days. If you watched last night's video, I explained that I bought in at 11.2 cents a couple weeks ago, and I sold just before market close at 17.2. And I also mentioned that this could rally at the opening bell, up into the 18 to 20 cent range today. And that's exactly what happened. Let me go to the 1-minute chart. 6 hours. So right at the opening bell, you can see minute by minute, this just ticked higher. And that's exactly what happens with these OTC stocks, and especially DNRG. It just continually goes higher, and you don't really get a dip. You just have to, buy at the asking price. But the 18 to 20 cent range, provided resistance, as I was expecting. And also the 200-day moving average is at 20 cents per share. So that's what caused this first big down spike here of about 2 cents per share in 1 minute. And anytime after you have a stock that doubles, an OTC stock that doubles, and you get a down move like that, it normally triggers a waterfall of selling. And that's what happened, all the way down to 12 cents. So, this is definitely a risky play. It did manage to bounce at 12 cents back to 16. It's somewhat weak, but the positive thing is the recent breakout level, now support of 12 cents, held. So even though price closed at 14 cents, which is kind of mid-range, more on the lower side for the day, there is some positive to this. But what worries me is on the daily chart. Go back just 2 months when it had that last huge spike. The next day it gapped open, sold off hard. That's exactly what we have here. Huge move up, followed by a gap and, crap, so to speak. And then look what happened the next day. More downside. If this repeats, we're going to be looking at 11 cents per share tomorrow, which could be a good buying opportunity. If you remember, the company is speaking with investors via conference call on Thursday night at 7 p.m. Eastern time. So who knows, the hype and anticipation of going into that conference with 2 trading days to go could cause a bounce, maybe similar to this one here. It could be good for 10, 20, 30%. I personally want to see what happens tomorrow and make a judgment from there, to see if this is going to have more legs or if the rally is done. I mean, I already took a nice 53% gain. I can't ask for much more. But, it's all on how you want to play it. Just be aware, of the risk. Remember this intraday chart of how it touched 21 cents this morning and then lost 50% in a couple hours. The easy money that was made over the past 3 days is kind of gone. This up move here on momentum. Now it's choppy and tougher to trade. But I wish you luck. Best of luck tomorrow.